stocks finished a fourth day to the upside. And we didn't just drift up to the upside. We widened out. So, there are some days where semiconductors lead the market and they're pretty much the only thing rising. There are some days where small caps kind of led, like yesterday. Small caps had a really good day, but it really wasn't a good mega cap day. There were some days where hard assets do really well, like gold and silver and Bitcoin, and gold miners have benefit from that kind of move. Well, today, all those things happen. All three of those things, as well as other areas in the market, really doing well. Volatility collapsed to the downside. Yields moved just a little bit lower again. This is kind of an everything on rally right now. So I'm going to break down what that means and some of the most important charts and how that breadth widened out in today's Market Outlook preview. So let's go ahead and get started. Today is Wednesday, November 26, 2025. This is the Market Outlook from MarketScholars.com. My name is David Settle. Before we get going too far, click this link up here. That takes you to our Black Friday sale, where we get 20% off of our Elite tier. Essentially what that gives you, all of our Elite subscribers get access to all of our premium tools and trading rooms and resources at a price that they lock in for 3 years. It's about 25% off the regular monthly price. Well, now, instead of just 25% off, with this Black Friday deal, you actually get 40% off. So it's a 20% off the normal Elite, 40% off the regular monthly premium pricing. This is by far our best price of the year. So you can either click this link at the top of the Market Outlook blog post, the link up here at the very top of the page as well. Be able to subscribe for that. If you click this link here, that will take you to our today's blog post. This is, of course, what it looks like. Everybody gets access to this for free. All you have to do is subscribe to our basic tier. So when you click that link, this is what it will look like when you get there. Just click this join free button. It takes you to our basic tier. This link will also take you directly to the basic tier. And you can sign up for free. You get access to all of the blog posts, right? Every single one of the blog posts here on our site, just on our video archives here on the Market Outlook. You get access to all of our blog posts, as well as the full Market Outlook video for every Friday. Every Friday you get those for free. Again, all you have to do is subscribe. And again, this is all you have to do to fill out. So it's a really easy form to fill out. Hit sign up and check out today's blog post right away. Let's start off taking a look at the S&P 500 with the market forecast indicators. You can see a nice, good rally to the upside. Really good move. So this last 4 days has been a really good 4-day stretch for the S&P 500. In fact, when you look at it, when I switch this to 4 days, it's actually been one of the best 4-day stretches. It's really since he's coming off of the April low and then coming off of eventually the April 21st low point that we got a 7% 4-day gain off of that. Coming off of May, after a little bit of a pullback, we had a 4.5%. Well, we're over 4%. So again, better move than any of these rallies that we've had in the past, near-term rallies that we had in the last little bit. And the nice thing is it's really impacted breadth in a very positive way. Big time surge in breadth the last couple of days. In fact, if you look at the McClellan oscillator, we're back above 35, which is a good surge in breadth there that we haven't seen for a while. That will help us. Still going to need a few more days to get back above 0, but that's a good surge in breadth there. If you look at the number of stocks above, well, let's look at the bullish percent index. You can see a big jump back above 50%. So that means, again, over half the S&P 500 has bullish patterns on their point and figure charts. That's a good surge. If you look at the number of stocks above the 50-day moving average, so stocks that are not in pullback mode anymore, back up to 283. So well above the 50% mark, well above the average. So a big surge in that regard. And then finally looking at the New York's the advanced decline line, another big jump today. So up to 1200. In fact, what would this be? The 2-week average is almost back to being positive after being slightly negative there. In fact, if you look at the 4-day average, it's a really high number. In fact, it's about as high as when we came off this April 21st low point. So really good. I mean, that is about as good of a breadth pattern. And the nice thing is leadership, whereas leadership was weak yesterday, it was not necessarily weak today. In fact, semiconductors, which is the leadership we want to have, jumped almost back above the 17-day at least, You know, so again, the last few days it hasn't been so strong. Yesterday we barely moved up at all after gapping down and then going lower throughout the day. Finally finished at the highs of the day, but barely higher than the previous day's close. Still staying below the 50 and the 17. Well, crossing out above those lines today. So uh, good pace there. And then gold continues really to make a strong move to the upside. Gold's been related, right? It's been related to risk appetite. It's been kind of correlated with risk appetite. So when you look at like miners, look at the miners there. These are the large gold miners. GDXJ would be the junior miners, both really kind of breaking out to the upside. And you see that pretty much every hard asset. I mean, look at silver. Look at the move higher to close to new highs on silver there. Bitcoin, which has really been struggling, had a strong day today. Finally, it's been the first time in a while that we had a strong day today. But again, considering how bearish we are, and we got that long lower shadow, it appears that we might have set the low point, the intermediate low point. Now remember, this is in correction because we're actually below the 200-day, so it's going to take a little bit longer for this to make a run higher, right? We don't, if it runs to the 200-day, it's got to be able to get above it and not fail. Otherwise, we'll be looking at you'll be looking at a bear market. But it looks like so far the 38% is held, and there's a good opportunity for us to continue to move higher here on Bitcoin. Volatility continues to show a sharp decline, now well below 20, well below 0.9% relative to the VIX 3M. And the VVIX, look at the sharp drop in the VVIX. That's a huge, huge drop in the VVIX here. Yeah, let me get rid of this there. No, excuse me, not that one. I guess that one doesn't really matter, but it's this one here. I mean, look at that drop in the VVIX. So again, 4 days. If I were to look at the rate of change for the VVIX and look at it over a 4-day period, look at this drop, 28% drop. Again, the last time we saw that was coming off the April 8th low point where we had a 4-day drop. And one of those days we actually went up, but we were coming off of a 171. Here we're dropping 28% in 4 days, and we're only coming off of 128. Kind of similar to what we saw over here when we dropped over a 4-day window here. Right around Christmas time. And again, this is kind of a holiday season too, so there's probably a little something to that. But still, I mean, if I were to zoom out for some context here, that is a significant decline. You can see over the last 5 years, it's one of your biggest declines that we've had. And really, most of these others are coming down from very, very high levels, and this just wasn't that high. Now, it was high, but it wasn't that high of a level there. Let's take a look at the last chart I wanted to take a look at is the Qs relative to IWM. We talked about this yesterday. So far as holding the 200-day, we do not want to see a break below this. Remember, this ratio is correlated positively. It's been a nice little move higher by IWM the last few days to get here, and the markets remain bullish. But that's not something we want to continue to see. If you look at the S&P relative to its equal weighted index, so it's also pulled back too in the last couple of days. This is 80% correlated with the S&P. So when the S&P rallies, we want the S&P to outperform the equal weighted index. It's still holding the 50-day moving average for now. A lot of these oscillators appear to be bottoming out, except for the longer term one. So there's a good chance that we can hold this, and we've tested and held the 50-day moving average a couple of times here previously. And this would be something, and you can see when we have bounced off of that, we've got a pretty good move. So this would be something to watch for to confirm the continuation of this intermediate run that we're starting, right? That we're this 3 green arrow signal intermediate run that we're starting here. So it's been weak, but again, like yesterday when we talked about passing the baton off to the leadership, we saw today semiconductors grab that baton. And we need to see some more of that going into next week after the Thanksgiving holiday. So that does it for today's Market Outlook preview. All right, well, that does it for today. If you click this link up here, that will take you to our foundation tier. You can subscribe to our site for just $29 a month. Get access to the full version of the Market Outlook video every day of the week, which includes the Market Outlook trades that we do at the end of the video. We put those trades on before the market closes that day during our Market Outlook live video. That is a class that's live streamed on our website at 3:30 Eastern time. We place the Market Outlook trade before the market closes, before I even make the Market Outlook video. And we also manage any old trades that we're still in and talk about whether we should stay in or get out of them or not. So we always talk, as much as I give you ideas for entries, we always talk about exits on all of our trades as well. And then you also get access to our Market Outlook Live Trade Tracker. That trade tracker tracks the results of all of our trades throughout the year so that you can kind of get an idea of how they're doing. Again, so far this year, from January 1st up to the November expiration, we're up $9,700 on all of our Market Outlook trades combined. We put $500 at risk on each trade. We put $1,000 on our non-directional trades. So it's been a pretty good year, really, really good year. And you can see that by itself actually pays for your Black Friday deal. Just having the access to our Market Outlook trades. And again, you can get that access for just $29 a month. No commitment. You can cancel at any time. Thank you very much for watching. Subscribe to our YouTube channel with this icon here, the red subscribe button down below. Click the thumbs up icon, like our video, comment on anything that stood out to you today. Share the video with anybody else. Follow me on Twitter at DavidSettle42 for more content between the videos. Have a great rest of your Wednesday night and a very happy Thanksgiving, and we'll see you all on Friday.